Hi, Peter Jones, author, property investor and ex-Chancellor Surveyor. And in going through the news yesterday, I found hidden away a little snippet which is going to be of profound interest to anybody who's investing in UK property or wants an idea of what could happen in the UK property market in 2021. So let me jump onto the computer and show you exactly what I'm talking about. I was on Sky News and I went onto the business section and I scrolled down and I found this article which says UK banks ready to withstand hit of up to 200 billion in face of economic risks. I'd like to know what's going on, so I read it. And it is pretty much about what it says. It's about how the banks are actually strong enough to be able to take a hit, both from the virus and from Brexit. But hidden near the bottom was something which I thought was fascinating, and it's this. It says, the bank also signalled that it may loosen the controversial mortgage interest rate checks, which may have prevented many prospective home buyers from getting on their property ladder. Since 2014, the bank, as in the Bank of England, has asked banks to ensure that those taking out new mortgages should be able to prove that they could still pay the mortgage if interest rates rose by 3 percentage points from the offered rate. According to some analysts, this test has meant many people who might otherwise have been granted a loan have failed to get it. However, since then, the probability of interest rates going up by 3 percentage points has dropped from about 50-50 to just 5%, making this test far more stringent than it originally was. So there's two things there. First of all, interest rates. The article is saying that the Bank of England have decided that the chances of interest rates going up by 3% is 1 in 20, whereas a few years ago it was 50-50. And if you think about what's been happening in America with the Fed being the American equivalent of the Bank of England, the Fed have said they're not even going to think about raising interest rates until 2023. In fact, they actually said we're not even going to think about thinking about raising interest rates until 2023. And the UK is currently thinking about negative interest rates anyway. Negative interest rates are already in Europe and in other parts of the world, Japan and other places. So really, interest rates, for those who are worried about interest rates, for the next few years, you don't even have to think about interest rates. They're going nowhere. If they're going anywhere, they're going down from nothing to negative. But this is the other bit. It says that the bank is thinking about getting rid of this stress test which they've imposed upon owner-occupiers. Now, I'm not at all suggesting that this could affect the buy-to-let market. You know how it is. We're all just greedy landlords as far as the politicians and everybody's concerned. Nobody really cares about greedy landlords. So as far as buy-to-let's concerned, I'm sure that the stress test will continue. But it's interesting that the Bank of England are thinking about taking away the stress test for owner-occupiers. And if they were to do that, then one would imagine that that would be like a shot in the arm for the property market, that it would have a positive effect on property prices because more people would be able to get loans and therefore more people would be able to buy and more people would be able to move. Now, whether that's a good thing for us as investors or not, I do not know. If you want to go and buy and you want to go and buy cheap property, then you probably want to see the market having negative effects or negative things coming along to affect the market, I should say. But either way, it is news, and I think it's very interesting that it's tucked away at the bottom of this article where probably not many people are ever going to see it. So, does it give us an indication as to what may happen next year? Well, maybe. I mean, one thing which I think is for sure is that the government have got to do something to make sure that the economy keeps going. At the time of recording this video, there's some conjecture as to what's going to happen to Brexit, that there's thoughts there may not be a deal, so we could be having a no-deal Brexit. And in the past, it's been thought that a no-deal Brexit could reduce GDP in the economy by 2%. The virus has already reduced GDP by another 8%, so the government will probably want to keep things going as much as they can. And one thing which they have done, of course, is given the stamp duty holiday to encourage the property market, because the property market is a good engine of growth in the economy. So if the stamp duty holiday is extended, which I kind of expect it to be, I think it would just cause all sorts of problems if they now took it away in March. It would have the opposite effect of what they're trying to actually achieve. So if there's a stamp duty holiday and the Bank of England loosen restrictions around borrowing for owner-occupiers, that could be two positives for the property market. Now, against that, of course, there's lots of negatives, like the fact that, as I say, GDP is minus 10%, employment's going up, blah, blah, blah. But all of these things will sort of filter through the system and it will have some effect. So you decide what it's going to do. Is it going to make the property market boom? Or is it just going to stop the property market falling as far as it might have done if they hadn't done that? Who knows? We will find out this time next year. I hope you found this video useful and informative, and if you did, then please come over to my website www.thepropertyteacher.co.uk, where you'll find loads more great property related resources, including free special reports to download and my best-selling series of ebooks, which includes the Successful Property Renovators Workshop, 63 common defects in investment property and how to spot them. And if you're just starting out in property, or if you want to grow your portfolio, you may be particularly interested in the Successful Property Investors Strategy Workshop, in which I'll take you through exactly how I started and built my property portfolio, starting literally with none of my own money, and how I built a portfolio of £2 million worth of property in just 4 years. And that was starting from scratch. I'll take you through everything that I did right so that you can copy me and do the same. And I'll also show you everything that I did wrong so that you can avoid the mistakes that I made, and so that you can progress in property and be far more successful far more quickly than I ever was. And this is based upon my own real life experience, and it took me about 4 years to actually work out how to do property investing properly. But in the 200 pages in the Successful Property Investors Strategy Workshop, I'm going to show you all of that 4 years knowledge condensed down so that you can use it immediately. And until next time, here's to successful property investing.